Hi traders, welcome to this live currency strength indicator table video with me, John, on this Tuesday, the 10th of October. So let's dive straight in then. The New Zealand dollar staying a strong currency at this current moment in time. We can see that it still appears as S1 on our trend traders, S2 on our day traders. So Kiwi's still somewhere where we want to be focusing a little bit of attention. Yesterday we featured Euro Kiwi. That's something we're going to revisit today. We're going to take a look at that currency pair to see if there's any opportunities around for us. On the weak side of things as well, we've got the Japanese yen appearing and the US dollar. Maybe the market moving into a little bit more of a risk on tone. You can see that the Australian dollar also appearing here as S3 on both tables. So potentially we're going to be taking a look at Kiwi yen, Aussie yen. We're also going to be having a look at Euro Kiwi, Euro Oz. The dollar obviously being a weak currency is quite interesting, but on the slate today we've got some dollar data. We've got an FOMC member speech, two FOMC member speeches, a Federal Reserve speech as well, and we've also got some data out of Europe in terms of the ECB President Lagarde speaking. So lots of data coming this afternoon. We had some data out already today, with the some data out of Italy, which was fairly positive. Euro dollar in fact actually traded higher, so there could be some potential moves on the euro later. But I'm going to kick it off with Euro Oz. Obviously, we featured Euro Kiwi yesterday, and I like the idea of potentially remaining on that pair for an opportunity. Now, interestingly enough, Euro Oz has traded through a trend line support. That trend line support spans all the way back here on the lows of the 22nd of August. That then spans out into the lows here on the 30th of January. If I just remove that one there, sorry, I just wanted to grab that and just bring that in a little bit. We did get a breach of that trend line on the 5th of June, but it did find support back at the lows on the 20th of March, and then we've continued to push forward. So this is a weekly chart of Euro Oz. We've then traded back through that trend line support and below some previous highs. So around about the 166 level, price has traded through. So that gives me the idea that potentially price is going to trade lower. We could be targeting these recently formed lows back through here around about the 163 and below, potentially even all the way down into the 159, which were these lows back in June. So that's the kind of thing that I'm looking at from a long-term perspective. On the risk side of that, we've got this trend line resistance from the highs span down through here, which is also confluenced with that 166 resistance. A breach of that would suspect that we'd probably see higher prices, perhaps back to that 1.7. So there is that sort of upside risk element there to the market, which we see potentially back in those highs of the 21st of August. So let's just go down into the daily chart. Daily chart yesterday giving us a real kind of idea of what's going on in the market from a daily perspective. You can see the rejections here up at the 166. We had a really strong bearish close yesterday, which makes me think that there's potential for Euro Oz to continue to the downside. Now, I've highlighted this swing low down through here. Obviously, this low is very important because price entered this level and we rallied to the upside. So I think any kind of downside pressure at the moment could bring it back down towards these lows. If you actually go into a 4-hour time frame, you can see the 4-hour low in here, which is around about 163.20. So that's what I'm kind of looking for there. You can also see that we've kind of breached trend line resistance here. There's almost that sort of pattern going on there. Let me just remove the higher time frame one. But you can see, look at all those rejections around about the 166. We've got these lows in here that have been breached as well. So maybe we're going to see a lower high develop and then a potential move to the downside. So I want to try and pick out an area where we could be looking for an opportunity here. Now, obviously back up towards the 166 could be an idea because we know that sellers have been active here in the past. So we could expect a 166 retracement there, a rejection, and then look to maybe sell sort of, 165.90s, 165.80s to see if we get that downward move. I'm going to go down to the hourly time frame. I do want to just have a little look at what's going on here because essentially I want to be looking for areas where price has stalled and things like that. They give me the areas where there's potential moves. Now, obviously, this zone in here is quite interesting because You can see that as we were starting to get bearish here, we had some buying coming in. Again, look at these kind of wicks coming into the market, and then the buyers have given up and price has traded lower. So obviously sellers won in and around this area. So the area that we're kind of like in now, around about this 165.40s. Now obviously we've got a sort of level within that, 165.50 could be a potential level of interest here. So what I like the idea of is maybe price coming into 165.50, we start to sell maybe 165.40 and see if we can get that sort of move back down into these swing lows. I could go lower, to be honest. I'm looking at a 15-minute time frame. Now, I don't usually go onto this time frame that often, but what I would like to see is some kind of double top going on, some kind of double top pattern, a revisit of this level here, a rejection of that level. Tell me that sellers are getting involved again, and then we could look for a potential drive lower. On the stochastic, that could even look like a little bit of a divergence play. So if we went into that 165.50 and there was a lower high on the stochastic, higher high in price, lower high on the stochastic, could give us an opportunity to try and trade that to the downside. So I'm actually going to set an alert back at this high around about 165. I'm going to go 165.40. I want to see if it can breach this high and reject. If it can, I think that's going to be an opportunity for a short side move. Obviously, 30-minute candle showing a very bearish engulfing candle. We've almost got the crossover here as well on the stochastic. So if you want to get sort of, not necessarily aggressive, but if you want to try and front run any kind of move here, you could maybe look to short 164. So that's 164.95. Let's have a little look here at kind of entries. 160, you might even be able to get away with 164.90, just to try and see if it breaks through 165 as well. I don't want 165 to be a sticking point for us, so maybe a break through 164.90 would be ideal. Stop losses on this one, you kind of want to be above that sort of high there, because if we do get triggered in, we don't really want to flirt with this area here. We want it to just kind of go with momentum. So you could either go on that basis, you could even go with the tight stop of like 60 pips, or you could even look at a sort of a 90 pip stop loss there. The reward ratio here is quite good anyway. So if we were looking to target 163 sort of 20, even with that sort of larger stop loss, we've still got nearly a 2R trade to potentially be had there. I like the idea of the double top, I must admit. I like the idea of price trying to find its way back high, it rejecting. There's potential then for further downside to come. My only concern is obviously we do have that ECB sort of move, so there is that to potentially contend with as well. So let's say 65.40 gets tested. I would look to sell, let's say 165.20. Just give it a little bit more room to try and penetrate to the downside. 163.20 could be targets. That's give us a nice round number of 200 pips. Our stop loss then could be more around about 65 pips maybe. Just to kind of give us a little bit more breathing room above that high. So that's what I'm going to kind of look for there. I think a breach into the 164. If we get the rejection, then it could be looking good for a little bit of downside. 4-hour stock is pushing more higher. So usually when we do get that, there is a potential for price to rally. So there is that also sort of concern that we've got to kind of watch as well. But that's just something you can kind of watch. I quite like that opportunity there. Alternatively, if we breach 164 and we head back towards 166, I would look for rejections in and around these highs up there. So I've put in a secondary alert at 166 as well. Let's go take a look at the other charts then. So Euro Kiwi obviously still on the list as well. Daily chart was bearish. We did come into support at 175.40. This was the first support that I spoke about. Price is currently finding support there, so that means that we probably will see that push higher. I still think 176 sort of 90 alert is good here. I would prefer to kind of see price try and make it to that point. It is obviously an area where there's been a lot of consolidation in the past. It may not get there simply because if I just go to a lower time frame, you can see that there was a high being developed around this area. So you may not get that sort of move into that point. We may only see a move into this high. So I will reduce the alert, maybe 76.50. Moving to 76.50, we may be able to sell sort of 176.30. Stop loss can probably be a little bit tighter on 60 pips there, and then a potential move down back into 175.50, but I'll probably be looking to target this low, which would be around about that 175.10. Secondary targets that 174.50. So there's still opportunities, I think, for some downside here as well. I'm just waiting for some kind of pullback into a key area of resistance, and then we'll try and see if the momentum shifts and if we can get short on those particular markets. Just having a flip back to the tables, they have updated. Euro has just left, so maybe we won't focus too much on that. Kiwi CAD did come up into targets, so we'll just go on to Kiwi CAD. You can see we hit the 0.82 handle. Quite like that one still. Kiwi strength is just something that's interesting at the moment, obviously it being the strongest currency. Let's go check out Kiwi yen. I don't know where Kiwi dollar is at the moment. Let's have a quick flick on there. Yeah, it's at resistance. Kiwi yen is very similar. If we go to Kiwi yen, we're heading into key resistance. Now, if I just go to the daily chart here and just have a little look, the key resistance from previous was around this 89.40 sort of area, and we suggested that if price fails to trade above that, it's probably going to trade lower. It did. It came back down into lows at 87. It then rejected 87, and now we're back into that sort of area. Now, it may have changed slightly. I like to use the sort of wicks and whatnot of the highs to show us where price is kind of heading towards, and obviously sellers got involved here, pushing price to the downside. So there could be an idea that sellers get involved again to try and push price back to 88. I wouldn't want to necessarily be long here because my risk to reward ratio is diminished substantially at this point. If I was looking at, if it was on the tables long and we were heading towards 87, then yeah, great. You know, I'm at lows, I'm at trend line support, there's lots of confluence there to get long. It being on the tables now, it's almost like the move's kind of gone here for us. I think if we want to be in long, if we want to get long in this market now, I want to be long above 90s, perhaps into the 92s, because what that shows me then is that buyers are willing to trade above these levels of resistance. At the moment, I don't know if they want to trade above that level of resistance, and despite the sort of opportunity to reach 92, even 94, you know, it gives us still some room to go in terms of if price does break through, then we can look for something to the upside. Alternatively, if price pulls back to trend line support back into 88, there could be some long opportunities down in there. Breach of this long idea is gone. I think breach of those 88s, 86s, then, you know, maybe even 87, sorry, then the downside move is probably a little bit more likely than the upside move. So in terms of yen return there, don't really see it at the moment. Dollar yen still heading higher a little bit at the moment. Maybe another move into 150 is possible. Aussie yen, I mean, Aussie yen was weak before. We tried to get short in and around this area of resistance. It didn't pay off for us in the end. Price continued higher, and it continues higher. You know, maybe the support down here at 93 was being held quite aggressively. So yeah, I don't see any longs in this market in particular. I think the best market to kind of look at the moment is that Euro Kiwi, is that Euro Oz. We'll see if our alerts can get triggered. 176.50 on Euro Kiwi, 165.40 potentially on Euro Oz. Like I said, if you want to get aggressive here, then the one way I'd look to maybe look at this 15-minute as a break of this 15-minute low, you know, or some sort of divergence on the stochastic could help here as well. We know that sellers have got involved here previously, so it's whether those sellers are going to jump back in as well. I quite like the idea of 165.50 being tested, and then we'd look to short maybe 165.20. Just gives us that better risk-reward ratio. So hopefully that makes sense. Thanks for watching this video update. I'll catch you in the next one.